Hi, and welcome to the Lance Roberts Show podcast right here at realinvestmentadvice.com. Our special guest today, I'm really very excited about this. He's one of my personal favorites to follow, Michael Pento. He's the president and founder of Pento Portfolio Strategies, produces a weekly podcast called the Midweek Reality Check. He's the host of Pentonomics program and the author of the book, The Coming Bond Market Collapse. And look, we got a lot of stuff to get into today, Mike, so we're going to just kind of jump right in. You know, just looking at last year, we had this big decline in the markets between, October, November, December. The White House comes out, starts putting pressure on the Fed. The Fed does almost an immediate 180. In September, they're talking about being nowhere near the neutral rate. By December, they're talking about, well, we're at the neutral rate. Now they're talking about not raising interest rates anymore, potentially stop reducing their balance sheet. What do you make of all this?
Well, first of all, thank you for having me on the program, Lance.
Yes.
It's really a privilege to be with you. So let's think about what is the Fed's true mandate. I thought it was stable employment and stable prices, full employment actually, and stable prices. Somehow that morphed into we need desperately, in order to continue as a race, to have 2% inflation. We can get into the silly discussion about how a central bank can nail the landing on a 2% rate of depreciating your purchasing power every annum, each and every annum. But that went out the window really in the fourth quarter of 2018, because we really understand the Fed's only mandate, which is really the only mandate it has ever had, which is to protect banks and to make sure their assets are stable and rising and that their stocks go up in price. That's really their only mandate, to make sure the stock market never goes down. And also, I guess you could also add that we never have another recession ever in our lifetime. The hubris and arrogance of these demigods to believe that they can control the business cycle forever. So what happened in Q4 2018? I have a model that actually predicted this collapse back in April of 2018. I said, beware of 2018, the fall of 2018. Find the nearest emergency exit. And I have a 20-point model, which I use. It's not perfect by any means, but it's better than just, guessing or looking at CNBC and deciding that everybody's bullish, so let's go long. It predicted that this market would collapse. The market collapsed. Russell, for example, lost 30% of its value in just a matter of a few weeks. The entire high-yield junk bond market dried up in December. It wasn't one new issuance, and the Fed panicked and did indeed turn around. And I would just add this, that the Fed didn't do 180 degrees. They just promised to stop raising rates, sort of, and to end their balance sheet withdrawal by September. They are not cutting interest rates, and they are not yet in QE again, but I think they will soon.
It's an interesting, conversation to talk about because, personally, my favorite method is just throwing darts at the dartboard, for figuring out what's coming, which kind of really seems to be the tack that most investors really take here, which is, whatever kind of comes across the media, obviously the markets are going up. We've got to be in. It's always interesting to look at money flows. In December, we saw big outflows out of equity funds, and here we are, 3 months into, this full recovery from the lows of December back near the highs of the market, and now investors are now buying back into the market. Typical, kind of investor behavior, doing exactly the opposite of what they should do. But this is really all kind of built over this conversation of the Fed and, of course, the Trump administration on trade policy. But, when we take a look at a lot of the economic data, Michael, are you seeing any real, change here that suggests that, the recessionary potential has been reduced?
Well, I guess the short answer to that is, for the most part, no. I mean, we've had a recession for the most part in parts of Europe, especially Southern Europe. Germany's not growing at all. Japan is a train wreck, actually. They are not growing at all. Our growth rate in Q2 of 2018 was 4.2%. Q1 of 2019 is supposed to come in at somewhere around 1.5% to 2%, according to my calculations. Earnings growth is basically nil, and we're trading at 19 times trailing 12-month earnings.
Right.
So, you have to ask yourself a question. Do you think it's prudent to pay 19 times earnings? By the way, these are earnings that are not reported earnings, GAAP earnings. They're pro forma or adjusted earnings. So 19 times trailing 12-month adjusted numbers with no growth.
Right.
And I want to add this too. The big turnaround, in all candor, my model missed this initial turnaround in January. We were short the market still. We actually covered our shorts in late December 24th, perfectly. Then re-entered the shorts in early January, which didn't work out at all well. So we closed out those shorts a little bit after January. But you have to ask yourself, what, Lance, happened? So the Fed promised, remember, on October 3rd, Mr. Powell said he was going to 3.5% on the Fed funds rate, not 2.25 to 2.5 where they are today, 3.5%. So to neutral, which he thought was 3, that's where the FOMC thought was neutral, to 3, and then he wanted to go above neutral for about 50 basis points for about a year or so. So that changed. So that gave a lot of mollification and placation to the stock market. But also, we had China. China went and increased their stimulus. Now, I mean, China's debt has increased. Let's go over some numbers. So China's debt has quadrupled since 2008. Household debt is up 700%. Corporate debt and government debt, total government debt, not just the national debt, their municipalities, their debt is up 400% in the last 10 years. So 700 on the household front and 400% on corporate and government debt. So China has re-leveraged in 2008. Actually, they started in 2000, re-leveraging up their economy massively. Then they did it again in 2008. Then they did it again in 2016, and they did it again in 2018, 2019. So here's the problem that I see, Lance. China can no longer so let's just suppose we have a recession or at least another slowdown, or the current slowdown stays protracted in nature all through 2019 and 2020. What is China going to do? Is China going to enter into another stimulus package? I don't think so. They have to re-stimulate their economy in 2020 just to lap the stimulus, the record amount of stimulus that they did in the early part of this year. What is the Bank of Japan going to do, Lance? Is the Bank of Japan going to lower interest rates? I don't think so. Is the ECB going to lower interest rates? I don't think so. They're already at zero. In fact, They already have negative deposit rates. So the money that the Japanese and European banks leave on deposit with the ECB get actually paid a negative rate. So they take their money from the banks. In other words, banks go and make more loans.
Right.
So there's really not much the central banks can do. There's really not much China can do in the way of stimulus. So the only thing left to do in the next downturn is for the Federal Reserve to take away their paltry 250 or 240 to be exact on the effective Fed funds rate, 240 basis points of easing, and then go back into another round of QE. That's what we have to look forward to.
Let me stop you right there, because that is a very interesting point that you bring up. And I want to come back. I want to ask you a couple of questions about exactly that. Let's just assume for a moment that that the Fed can't magically, end the business cycle as we know it. And we actually do have a recession in the next, year and a half, 2 years. Right now, almost 3/4 of CFOs around that were recently surveyed suggest a recession in 2020. I would like to come back and ask you about the effectiveness of all these issues when we come back after the break with Michael Pento. Michael Pento, president of the Pento Portfolio Strategies. We'll be right back in the Lance Roberts Show podcast right here at realinvestmentadvice.com.
You can get daily real investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at realinvestmentadvice.com.